Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Friday, April the 14th. Today, it's a very interesting day, and we got retail sales month over month came in lower, way lower than expected, minus 1%. Excluding autos, minus 0.8, and we were expecting minus 0.3. For the month over month, we were expecting minus 0.4. So way, way lower, and excluding gas and autos, minus 0.3. Manufacturing production also in the negative, year over year, way, way lower. Consumer sentiment, 63.5. So despite the fact that retail sales were lower, production is lower, inflation is going lower, the consumer sentiment preliminary is higher than expected. So consumer sentiment is still bullish. They are still willing to spend, and that's not good. Inflation expectations for 1 year preliminary 4.6% instead of the 3.6% that we were in the previous one, and 5-year inflation flat, same as the previous one. Current conditions way higher, and consumer expectations way higher. So what is all this about? This is all about the expenditure. The consumer spending that is not stopping. People are not stopping purchasing. They used their bank accounts, their savings, and once that stopped, they are going on credit, higher and more credit, but they are not stopping spending, despite the fact that they are paying more and more prices, and they will pay more higher interest rates on their credits, on their loans, on their mortgages. So this is a spiral of bad economy outlook. If we are continuing spending, if people are willing to continue spending, this is not going anywhere. And Fed's work is just the opposite. They want to stop the spending. So they will continue raising interest rates, despite the fact that we are going to review the bank's earnings, despite those earnings being really good. So banks are doing good. They were bailed out when they got in trouble. They got bailed out, and they are now reporting big earnings. Come on, that's not good. We are in a problem. Households are in a problem. Personal economies for the families and for the people is really struggling due to these prices. And banks get a bailout and also are reporting big earnings. That's not acceptable. That's a situation for a strong economy, because the financial sector is a good indicator of a strong economy, but the focus right now is not the strength of the economy, because financials and banks were doing quite good. We are focusing on inflation, and the people, just the consumer, stop spending. If they don't stop spending, inflation will continue higher. We've seen prices going a little bit lower from the CPI, and businesses and producers manufacturing already putting lower prices on the PPI, but despite that, people is just not stopping. And until that changes, we are not going anywhere with this inflation, and Fed will continue pressuring those expenditures. So we got also the Fed Waller speech. I have really interesting facts from the Bostic and Waller that were today doing some comments. So first of all, International Energy Agency, IEA, is saying that high prices on energy will hurt consumers and threaten economic growth. And economic growth is one of the important things that central banks are willing to save. And that's also impacting the markets. High energy prices will impact growth and will impact market value. Credit Suisse sees an 80% of a US recession over the next 12 months versus the earlier projection of 60% by Q1 2024. So now it's not only the Fed that is seeing US recession, it's also a big European bank, but they are saying that 80% chance of US recessions in the next 12 months. Recession is in around the corner. More and more is going to be the big topic. Now with Bostic, Fed Bostic says recent inflation data encouraging, however, prices are still increasing too quickly. The Fed needs to do more. After one more interest rate increase, the Fed can pause and assess. This is big. They are confirming that they are going to raise interest rates again. If we check the probabilities right now, we are seeing 84% for a 25 basis points. And more than that, look at all these. We are going to talk about bonds also. This September is not pricing in is with 43, but increasing more and more. Those interest rates cuts in September and in December are gone. They are more and more increasing the probabilities, and that's really strange. Maybe they are starting to think about maybe we are wrong. Bonds market is starting to realize that maybe they were betting on interest rate cuts, but Fed is not willing to do so. That is going to be huge. More from Bostic. Rate hikes of the past year are only now beginning to bite. The full impact will take time. And that's why they are willing to pause and to hold at that terminal rate of 5% most probably throughout, I think, in my opinion, is 2023. All this year, they are not going to cut any interest rates. And finally, Bostic also, the Fed will need to pause and evaluate the economy inflation path to avoid unnecessary economic damage. Okay, we already know that if banks are in trouble, they will bail out. But if other sectors need support from the economy, I think central bank is going to support them. That's okay. Now, another Fed, Goldsby. There is undoubtedly a chance of a small recession. Inflation is decreasing, but there's still clear stickiness on some inflation. That is why this core CPI is not a good number. Core CPI was sticky, was showing still 0.1 increase, and that's not good. More from another Fed, Waller. Recent numbers indicate that the Fed hasn't made much progress towards its inflation goal. So we have not made much progress, and rates need to increase even higher. So 25 basis points again. Data from the first quarter of 2023 continue to amaze with faster growth and more job creation. So, wow, I think they are saying that they are impressed by the resilience of some sectors, the labor market, and they are still seeing faster growth. They don't want growth. They want cool down. They want people to stop spending, sectors to stop seeing signs of not recession, but see decreasing in the numbers. And last, Fed Waller also longer than expected by the market. Monetary policy will need to remain strict for a substantial, quote unquote, substantial amount of time. I think 6 to 9 months, it's their goal. They are going to increase in May 25 basis points, and they are going to hold at 5.25% until the end of the year for 6 to 9 months. That's what says the previous history when we did that in the past. Now, let's talk about financials. Let's talk about JPMorgan. Post record revenue that tops expectations on higher interest rates. Well, who knew? Well, that's obvious. High interest rates, higher gains, higher value for them. It jumped. Let's go real quick to see the chart. They basically jumped 5%. Look at this move. That was really big. 5% on earnings, 6.56 right now, 6.60. Holding those levels. JP Morgan, the biggest bank in the US, is saying the CEO, Dimon, that there will be inevitably be a recession. Well, another one big personality is saying that we need to be prepared for a recession. EPS 4.10% versus the 3.38% big EPS. Adjusted revenue 34 billions, estimated 36 billion, so 3 more billions. Increased total deposits and increased loans. So JPMorgan is doing really well, guys. Another one, Wells Fargo. Well, it gapped up into the open the most at 5.68%. And it reported EPS 123 versus 113, beat on EPS, and also beat on revenue, 20 billion 673, estimated 20 billion flat. So this was a big push, 5.68, but since that, we are down 5%, and since the open, minus 0.70. So actually, we are in the red for Wells Fargo. I think it's not at the level of JP Morgan, but I think Wells Fargo is going to do well. Another one, Citigroup, sorry. Citigroup, C. Well, also reporting earnings, big jump, and now from the open, we are in the green 4%. Also a big beat, EPS 2.19 versus estimated 1.66. Revenue also beat 21 billion versus 19 billion, 2 more billions. I mean, banks are doing really well, right? Wells Fargo, I forgot about their outlook. Looking ahead, we continue to move forward on our risk and control agenda, which is our top priority. So they know they are still needed to do some things internally. So I think that's why people are just not betting on Wells Fargo. But again, good news for all three banks. And Blackrock. Well, Blackrock is not doing well. Adjusted EPS 7.93 versus 9.52, missed, but top on the revenue. Still top on the revenue, but still 9.8% decrease year over year from 7.69 to 4.25. So BlackRock is not in the red, but it gave up all those gains since the earnings release. So this is the status of the banks, the status of what Fed think about the economy. And now let's do the big one, Nasdaq, our focus. Remember in my previous video that I highly encouraged everyone to check. I was really upset regarding this move. This was a really sentimental move, visceral move, vicious move. And I think it was unsustainable. This was not on fundamentals, but on certain hedges that big players were playing. If you check the pre-market action, at this level, we rejected settlement from yesterday, big important level on futures, and we started going lower. First stop at 7 p.m. UK, England time zone, England session starts, and at this point we got 8:30. At 8:30 we got retail sales. Big hit on retail sales. Does this, and we check on the 30-minute chart this support. Previous support, yesterday's support, today's support. Okay, everything was okay. Maybe we are holding. We rip to the upside at the open as usual, but look at this. Look at these 2 weeks falls, up thrust, breaking lows, and big move. Bear flag, big move, and since then we are going lower and lower in this descending triangle. This was consumer sentiment. Consumer sentiment way higher. And with all the data all this week that I've already explained earlier in the video, I think big players are saying this is not sustainable. We cannot hold these levels into a recession, into big interest rates, and even higher that all Feds and all data is pointing towards. So point of control switch from higher to low, and they are just hitting and hitting and hitting, and we just broke 13,109. That was previous support on the 30-minute chart, and we are now at the blue line, that is this level. This blue line that was the first pivot that we held throughout all this consolidation, 13,068. I've been mentioning that level, I mean, since at least 1 week. We are seeing weakness, but still there are some bounces. This is not gonna flash a sell-off directly, but I think this is starting to bleeding out. And you have to realize that if you see other markets like crude oil that is seeing demand destruction already at the horizon, dollar, look at dollar. Dollar is super strong. Why? Well, there will be a lot of inflow money into this market, into the dollar, because they are going out stocks, going out yields, going out gold is minus 2%. Gold is just being destroyed today. Look at this. I thought we may reach 2078, these pivots last year, but I think gold is being destroyed. So where is all the money going? To the dollar. Yields are ripping 3% 45 in the 2-year and 2.12% in the 10-year, sorry. And notice I have an alert here that I can already remove because it was already triggered. And look at this. Both 2-year and 10-year are breaking market structure. They were held and they are now breaking out to the upside. And look at this. I was mentioning that previously. If we are going to raise rates 25 basis points in May to reach 525 terminal fund rates, at September, bonds market are pricing in 5%. So no interest rate cut. And in December, they are leaving a gap behind without feeling it. That's why I have it here, 4.57. That's 50 basis points for December. I think this is also wrong, but I think we have to give them time to realize that for 50 basis points for December is just insane. I don't think there's any interest rates cut this year. For September, they are already realizing that. Let's see for December. It's just a matter of time. And overall, weakness everywhere. Google is the only one that is somehow in, but the rest of the market, and most importantly, some of the key players, financials, banks, crude oil, gold, dollar, they are all moving in the same direction. That is weakness in overall. And that's my key message for today. Yesterday, we just ripped the faces of a lot of shorts. I still think there's a lot of longs at these levels. There is an insane amount of longs down here. So until we break this level, I think there's no clear bearishness in the midterm. But I think we are already starting to realize that this is unsustainable at value, growth, and most importantly, towards Q1 earnings. I think this is not going well. I think that's why some people are moving from indices, from stocks to some other markets, and that's why we are seeing this weakness. Let's see how we end up, because as you can see throughout all these weeks, We have been in a very choppy market, and we have to wait. Right now, this pivot is quite important. We are still pushing off 13,068, but I think there are some key levels that were destroyed. This was quite important. This was quite important. So this area around here is, until the point of control, is quite important. We have like 40 points from there until we really change sentiment. I really doubt we are going to reverse. Anything can happen, but I'm liking this kind of move. We need more of this in order for everyone to realize what is coming. And what is coming is, I don't want people to get trapped up here trying to see, okay, we are going to the moon. I think people need to realize what kind of economy and what kind of market we are going to see in the upcoming months. And I think that's my overall message. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos and to support my channel, my efforts. Thank you for that. For all the people that is subscribing, thank you. And remember that I upload new videos every single day for market forecast, market updates, and market recap. Let me continue sharing my experience, my technical and fundamental analysis, and my view on the markets to try to help you understand what I see on the markets. So I'm glad you are with me. I hope you had an amazing trading week. Be careful today. Today is a very weak and volatile day. Don't ruin your week, and remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend, and see you on Monday.